Okay, and we are live. We are live on Facebook, LinkedIn, and YouTube. Good morning to you all. Thank you so much for joining us on Coffee Time with Marie and Pedro.
Yes.
For those of you who are returning viewers, thank you so much for your support. Give yourselves a hand and a clap because you are committed to learning from us on accounting, tax, and business strategies. Thank you so much for coming back and committing to learning. For those of you who are joining us for the first time, thank you for choosing to come and learn from us. And put a thumbs up or send, kind of a hand or a gesture, something that we know that you are here. Good morning, Lady Capricorn. Great to see you here. You're returning again. Thank you so much for your support and continuous learning. So if you haven't subscribed to my channel on YouTube, Marie Torossian CPA, please subscribe so you get a heads up when we are going to go live or whenever we post a new video. You can also, follow my Facebook page and the LinkedIn page the same way so that you know when we post something new or we're going to go live so you get the first dibs. So without further ado, we'll just a quick intro. My name is Marie Torossian. I'm a certified public accountant and chartered global management accountant, an experienced auditor and a CFO. Currently, as a CPA advisor and transformation coach, I use my proprietary methodology, Valuation MT, to help business owners grow from their first million to the next 10 million and more. I've authored a couple of books, and I will be putting the links below. The first one is called The Complete Guide to Business Growth, and it's also on Kindle. And the second one is an ebook you can download from guide.marietorossian.com, and that is the guide, the business owner's guide to operational accounting. It's a lot of guides, so it's all about education.
Yeah. There you go.
Of course, as always, my featured guest is my friend and my tax colleague, Pedro. Pedro, please
Good
introduce
morning.
yourself.
Good morning. Good morning. And we're excited. It's approaching the end of the calendar year. And
Uh-huh.
so this is good times. My name is Pedro Gonzalez, business and tax strategist. As I mentioned before, there's a lot of tax preparers, but what we focus is on the tax planning and strategies to help our clients lower their taxes. Taxes erodes our wealth, improve their cash flow. Cash flow, regardless of the business and the size of your business or industry, cash flow is lifeblood. And number three, exit strategies. All of us are going to exit eventually. It depends on
Yes.
how we're going to exit. So that's our focus, is to help you achieve, maximize your goals and financial success. And just like Marie, we have the guide to real estate investors, the tax guide to real estate investors. I'm working on another one for specifically for S corporations. A guide. It's going to be quite interesting because there's some strategies out there that when you Google, you find kind of the same repetitive information. We're trying to put something that is going to be a little step up of that and give you some true idea, something that you can find some value. So
Yes.
we're excited about that.
Yes. And you know what it is that when you have an actual guide that you're reading and then implementing, it's one thing versus you read it one time on Google and it just goes. So the
Correct.
guide is there for you to go section by section or chapter by chapter, say,
Correct.
okay, this is what they're recommending. Let me see what I can do on my own. And of course, at any point in time, if you're stuck and you say, well, that's it. This is as far as I can go as a DIY and I need help, you know where to come. And we're always here to help you out.
Exactly. Yeah. Yep. Yep. Very good.
Um, so I wanted to go just remind our audience some of the other episodes we've covered has been about, let's say, self-employment. We've talked a little bit about bookkeeping. We've talked about taxes and due dates. In the past few episodes, actually, it's been more like a tax planning
Yeah.
series. And just to kind of give a quick summary, with tax planning, we start off with usually an initial meeting because we want to understand the client's goals and visions, aspirations, what is their legacy, what they want to leave behind as a wealthy individual. We analyze their financial growth currently and their projections for the future, and then we'll consider tax deductions and options that are available to them, such as, let's say, the life insurance, a retirement plan, other investments that could help them out, uh, charitable donations, what else? Flexible and health plans. So it could be a variety of things. So we want to know what would be the right fit until we actually go through the initial meeting and understand what is their future goals. And from there, of course, once we have a full understanding, then we'll establish a priority list, and then we implement the tax strategies and the plans. Anything you want to add there, Pedro, before we move on to today's what we want to cover today?
Well, I wanted to do a quick recap of a few pointers, just kind of remind people a couple of things that they can do as we're approaching the end of the fiscal year. There's still a couple of things that can be done over the next 2 weeks. So, in some of this is on the previous episodes, but I just figured just quickly I'm going to give 7 pointers. One, defer income to next year, especially if you project the next year you're going to be a lower tax bracket. So that's a quick and easy one. If you're in a situation of billing, you can postpone it, and that's going to help you lower your taxes. Number 2, accelerate deductions. Looking to situation, for example, if you itemize deductions, you can go ahead and make payments to your, for example, medical expenses, your interest, state taxes, your charitable donations. Looking to also, making those deductible charitable donations. Now is a good time to review that and make those kind of decisions to help you to make those contributions and put it as part of your plan for 2021. Looking to your withholdings. Most people still have probably one more paycheck left for December, and you still have time to make an adjustment, not necessarily a correction, but an adjustment. You can go to and do a W-4 and request that an additional withholding be done on your taxes to compensate, to adjust for any kind of shortfall on taxes. That can help you also prevent any unnecessary penalties. Look into your retirement accounts. I mean, now again, it's a good time to, if you can, is to maximize your retirement contributions. Also, this is not necessarily going to help you with taxes, but it will help you prevent any penalties. Is if you are going to be having any kind of required minimum distributions. Those individuals already reached an age that are going to be required to make a minimum distribution from their accounts to do so. Because again, now is the time to make those distributions. Make sure that it is happening, and that you execute those distributions. And the reason being is that the penalty can add up. In the case of minimum required distributions, is 50% of the amount that should have been distributed, and it can be costly for the taxpayer. And number 7, look into loss harvesting. Now is again a good time to make a call to your financial advisor and do some harvesting of losses in your portfolio. You might have a couple that already generate some losses, then realize them. We can discuss that another time, the difference between unrealized and realized losses, but to execute the losses so you can use those losses against your ordinary income is a powerful tool, because you're taking capital losses and applying it to the higher taxes, which is your ordinary. So you can use those losses up to $3,000. It can make a difference in some individuals. So use it. It's there.
Right. Absolutely. So this is a little extension of, what we talked about with the tax planning. So this is some of the extra things that they can still do prior to the year end. And then, so today's main goal, though, is still part of the year end close, but it was more towards what business owners can do to kind of prepare for the year end close. So let me just put it out there. And how many business owners in your 30 plus years of experience, how many business owners actually are aware or properly do their year-end close?
Mm.
If you had to guess, give me a percentage.
Mm. You'll be, and you can tell who does. You can see the performance, and you can see who. But I would say probably I will venture to say less than 20% of businesses.
That's crazy. That's
Yeah,
crazy.
it is crazy. It is disappointing. It is surprising because again, it's something you and I have talked. How much value they give to the accounting section. And the reason is it is a tool that is available to them. It's just not being utilized properly.
Correct.
If you utilize either be your bookkeeper, your accountant, if it's your CPA doing your accounting, is that the accounting can be actually a money save and a cash flow improvement tool.
Absolutely.
And so, but if you're just wanting to come now to kind of want a shoebox and just throw those numbers in and with no
Yes.
intention of extracting data from this, then it's just an unfortunate situation.
Yeah,
How
absolutely.
about yourself? I mean, like, what has been your experience?
Yeah, I would say from my experience, most of the time that I onboard clients, they are actually in a complete chaos. So from my experience, it's been every single one of them. Everybody's been fallen completely behind on their books. I come in and actually go and fix everything and then take over, because then they start functioning and then they start growing, because if the data is a mess, they can make decisions. When we take over, we fix it, and then we provide them financials on a monthly basis. We review with them. Now they know what actions they need to take. So for me, since I started the firm, it's been like that. It's like every client that came to me was in shambles, and we fixed it. So but yeah, in the past I've been in the private sector for a long time, so I don't have that type of the public experience you've had for a long time. But yes, in the past 2 years of the having my firm, it's been that way. That's how I've gotten all my clients. They've been
Yeah.
already in a mess. So
Hmm.
yeah.
No, I was gonna say the again, it's until you have a casualty event that you realize how valuable the
Yes.
accounting is. I in my years of experience, what we have seen, and this is when they realize, oh crap. And that is, for example, when they get an IRS audit notice,
Yes.
and they now have to go back and they say, well, I have my accounting done, but when the accounting
Mhm.
is not done properly, this is going to be in essence your evidence to support your deductions. This is how, in essence, what we're going to use to battle the IRS. But if
Right.
that is not properly done, how are we going to represent you when the accounting is unreliable?
Yes.
So it's situations like that makes you realize, oops, you know what I mean? Like, and then try to reconstruct 3 years back, because again, the IRS is not auditing right now 2020, not even 2019. They're going back to 2018, 17 period. So
Hmm.
can you imagine now that if your records are not in order, or let's say in some cases, which surprises me, is that no accounting has been done,
Yes.
and so go back to 2017, 2018, try to now reconstruct those numbers.
Yes.
It's gonna be challenging.
Absolutely.
And
And
so
it's
a situation like that that brings to the mind of entrepreneurs is when situations like that happen. When there is for example, a fraud situation, and then
yes.
again there was no proper accounting, there was no way to catch it, because again, as long as the business start, you see money being deposited, you figure I'm good. It's when all of a sudden you realize that all of a sudden, like, wait, it doesn't make sense. Like all of a sudden, I see myself working harder, but my account is not even growing, or it's just reducing.
Right.
Oh, Marie, can you take a look at my numbers? But by then, might be too late. Whomever
Exactly.
perpetrated the crime is already gone.
Exactly. Exactly. By the time we put together the whole picture. It's months out, could be, and documents that need to be put together. And yes, it's hard to find that. Absolutely.
Yeah, in
You
situations
know,
like that, it's unfortunate. Divorces when that happen, and again,
yes,
either be the wife or the husband that owns the business, and he
true.
or she now is trying to uh, prove or either side, they're trying to
Right,
determine
right.
now the valuation of that business, your cash flow, and there's no reliable records. You see situations of disputes between partners. Again, we can go through a list of events that
Oh,
happen
yeah.
that, and then you can see, oops, my accounting is
Yes,
the key for my
absolutely.
success and my to move up. You know what I mean? And then when you work on with your clients and planning, business planning, enhancement, how can you help somebody if the accounting is not proper?
Yes,
You know what I mean?
absolutely.
It's not properly kept. How can you advise somebody about, yes, we can discuss the goals, but if you're gonna try, imagine you sitting down with somebody now, okay, I need you now, let's work on a budget or a projection. Can you
Yeah.
imagine trying to sit down to do a financial forecast now for a company?
No way.
Yeah, yeah,
Yes, if we don't have the data already set up in the system in a way where it's understandable, that means we have to first put together the current year's financials so we can have a starting point and then be able to start projecting. Something I wanted to bring out yesterday, I was at a dinner with fellow 10Xers, and it's so funny. You and I covered this one example where one of our prospects actually, and we did not take that job. Their past accountant or tax person um, actually filled out the wrong form with a lot of fake information, and we did not actually take that person's tax return. We did not do it. A friend of mine, and he saw our show, and
okay,
specifically that one,
yeah,
and he was telling me yesterday. He said, "Marie, when I saw that show, I was like, whoa, this happened to me."
yeah.
So what happened is that he did not know, and his accountant used the wrong form, and because he did not keep his records well, he went through an audit, and right now they are literally, the IRS is going through everything because he doesn't have all the records in place. Now they have to talk to every single person he did business with, so it can be so massive. So the reason I want to cover this is two things. One, the fact that I think to kind of tell each other, saying we are covering a lot of information that I think now it's out there and people are going to learn from it.
Right.
And second is that I'm hoping when they hear this, they take the right step to avoid any kind of issues and problems. And that's why we're here trying to teach, right?
Correct, correct.
So I was in a way very happy to hear that this type of information is really helping our friends and our audiences that are listening in to be like, okay, yes, it either happened to me, or wait a minute, let me get my stuff straight because I don't want to get into trouble. So um, with that, I wanted to go through a kind of a list that we can give our business owner audiences as to what they can do from a year-end perspective. Let's say a list of things that they could do. Say one of them could be check their accounts receivable balances, right? That's a key area. End of year, you want to make sure you don't have any bad debt, anything that's staying out there for too long, right? So that could be one item. um, Make sure you're following up your clients. Anything that's over, what we say, 120 days, usually it's considered bad debt. But if you don't have a policy, this is a time to create a policy, because if you need to write it off now so you can get that as a business deduction as well, right? Right, Pedro?
Correct. Those are very good points, and with that also, you have to understand that regardless of the size of your company,
Hmm.
you have to act as a corporation. People have to
Absolutely.
stop this thing that your S corp or your C corp or your LLC is not you.
Yes.
It's a legal separate entity, and you have to treat it as such. And you have to stop this thing that's my petty cash. It's not your petty
Hmm.
cash. So even the money's being extracted from that business has to be documented. And
Absolutely.
if it's a distribution, then document a distribution. If it's meant to be a loan, then document a loan. I can
Yes.
give a couple pointers that from my experience. For example, let's say, for example, Irs audits. One is financial statement audits, but again, you got to realize
Yes.
that if you're going to be audited by the IRS, their mentality is different.
Mm-hmm.
Their thresholds are different. They're
Of
not
course.
bound by certain. No, that is different. So they're going to be looking at, for example, one of the areas they look at is, do you have corporate books? And then they open their eyes like this, because I can assure you that most S corps do not have minutes. They do not have even the stock certificates.
Yes.
They
Doesn't
don't have
exist.
it. And so they right there. See, the reason they go for that is to prove that you're a corporation. That's the
Yes.
reason behind it. Is because if I can pierce that part, then you're no longer a corporation. So then now you have a problem, because then some of those items that typically you can do as a corporation, you're just simply now a Schedule C potentially. So
Right.
that's why it's critical to don't ignore certain things that you see that corporations do. No, but this is my small business. You have to remove that. So you should
Right.
have your corporate books. If you don't have
Yes.
it, run and get it
Like a
done.
corporation.
You know what I mean?
Yeah.
Just get it done. You know what I mean? It's not really that expensive. It's gonna be more costly if you don't do it. So the other thing is business, what we call related party transactions especially between the corporation and the shareholder, loans, either direction. Either you
Yes.
lent money to your corporation or the corporation lent you money.
Yes.
It has to be documented. There should be at least a minimum interest imputed to that transaction to make
Yes.
it a legitimate loan. They should have terms,
Absolutely.
just like a bank. You know what I mean? Even if the term is a 20-year repayment, just do it. Just document. It's simple. It costs you less. And if you have to hire an attorney to draft those documents, hire the attorney. Get it done. It's cheaper than when you get the IRS on your neck and they say, no, actually, that is not. And listen, I have seen and I have had to battle some cases. And, and some of them we have been able to convince, and others we can't, because there's no documentation. They're going to say that is not a loan to you. That is, guess what? Wages. That's what they're going to go for, because all that money that they, quote unquote, you took as a loan, they're going to say, no, that's not a loan. Where's the loan document? It doesn't exist.
Exactly. They're always
So,
going to need the records, of
correct.
course.
So it's
Yes.
going to be wages, meaning that now we're going to go retroactively. There's payroll taxes owed. There's penalties. There's all of that stuff.
Yes. Yes.
So look at those transactions, like you mentioned, receivables.
Yes.
You know what I mean? Look at your receivables. Document it. There should
Right.
be a receivable aging that
Yes.
shows who your customer, how much they owe you, and if you're gonna write it off, then at least you have something, a basis
Mm-hmm.
to document that I wrote off. Like you said, there's a policy.
Exactly. There has to
Have
be
it,
a
have it
policy.
documented. And again, it's just a simple documentation that you can have on your file.
Yep. Absolutely. Yes.
So yeah, look at that. The capitalization policy. That's another area that people ignore. I can assure you a lot of people are overpaying in taxes because they're capitalizing things that could have expensed. It makes a
Right.
huge difference. You're saying, no, there's a big difference. If you capitalize something, even if you're taking Section 179, and I don't want to bore people with all this, but
That's a show on itself.
yeah, it's a conversation. Yeah, exactly. But capitalization policy, and there's a strategies in there that can help you lower your taxes, but you have to document it.
Of course.
You have to have a policy in place, and again, it's a very simple policy that you write, and it will help you in preventing a headache out of IRS situation.
Yes. Yes. I mean, from a lot of the smaller businesses, they can set their capitalization policy, say around $2,000. It could be $5,000, but just
Exactly.
create one based on what your highest or lowest,
Yeah.
purchases, big purchases are, capital like assets are, and just go from there. And then that way, and then list every purchase. And sometimes it's a combined thing, right? Like where they're actually, let's say, purchasing 20 computers at the same time and, installing at the same time, that's a massive purchase. So that's a capital expenditure, and that could be a really great, from a tax perspective, that's a great tax write-off. The other thing to look at is also inventory, right? When people have inventory, they kind of overlook making sure inventory is valued at the way it's supposed to. I've seen people with inventory balances, but there's really no inventory listing. So I really can't tell which inventory and how much of the quantity, what did they purchase it at, and what is the value now? Can they actually, what is the newest value? And that's something that they need to list as well. Any thoughts on that end? How does that affect them from a tax perspective?
Yeah, no, it all of this, it has not only an accounting, a tax consequence, because again, what happens is that you are applying a cost against your revenues. I mean, as you're selling, so there has to be again a policy of what method of valuation you're going to be using for your inventory. Now, again, a lot of this is not, people don't think about it until a casualty happens. Either be, again, an Irs audit comes in and they're going to question your inventory balances. They're probably going to try to say, no, you got to remove some cost and put it back into your inventory, because they're trying to lower your cost of goods sold. But also eventualities like, for example, we were in a case that I was hired as a consultant that there was a theft of inventory. Now, the counterparty, the insurance company, hire their own experts, and then they're going to say, okay, so bring us the inventory ledger.
Mm-hmm.
They don't
have a ledger.
Yeah, exactly. So how are you going to prove what exactly you lost, the value of that, which items that were supposedly stolen? So how are we supposed to settle this? So again, a situation like that makes you realize how important the accounting is in the detail. If you have inventory, and let's say you're a retailer, that the inventory is not only a dollar amount, because sometimes but my inventory balance runs around X, and it's not material to the financial. That's not the issue. Is that all of those transactions running through, because you can be one of those, for example, dollar store type of thing.
Right.
So meaning that your inventory balance probably is low, and you have a lot of items, but it's like 50 cents, 75 cents, $1. So, but that's not the issue. Is that if you have an eventuality, you want to go in a casualty type of situation, is that how you're going to prove the loss, or if you get audited, how you're going to prove that yes, that I'm shifting the cost properly. So those are kind of events that needs to be taken into consideration. Inventory is critical. When you add inventory into the accounting, it is more complex. It adds another layer of complexity to the accounting.
Absolutely.
But I can assure you it pays off. I can guarantee you pays off in the long term.
Yes. And of course there are, you can, if someone doesn't have massive amount of inventory, they can keep a very simple Excel spreadsheet and just track what they're purchasing, the description of the items, and then the quantity purchased, the cost that they purchased at, what they sold, kind of like a very simplified, if it's not a lot of products. And then as they get into a larger and more quantities that they're purchasing and selling, then they would want to set up some type of a more automated, software system that's tracking all of that. And all they need to do is probably just print a report at the end of each month, and they have, a listing. And then, of course, from there, you don't want to just rely on that, because it's one thing that it's listing as sold, but it's another thing when you count at hand. You know what I mean? And there's going to be, you got to reconcile between what's in the warehouse and what's actually saying it's sold. And you don't want to double count something that's actually it's sold. So that's something that, and when they go through a financial audit, auditors will kind of look at that and test that as well. So yeah. So other things that they should also do is make sure that any invoices that they've received and they're related for this year, they should make sure to record them. And when I say invoices, like bills, from vendors, make sure they are, entered now. a lot of times when we've gone to audits, we're always checking, and we're in January and we look at the books, and then we see December bills that are entered in January the following year. So we want to make sure that they are recorded in the correct period. So it's a December bill, you receive it in January and you receive all the items in December. It is a December invoice, so you got to put it there. So make sure you're entering it in the correct period, and you are properly showing your accounts payable balance as of December 31.
Yeah, when we used to do those audits, we used to do those, the famous cutoff testings.
Cutoff testing, that's the one, yes.
Yeah, so because that's exactly what happens, and why is that critical? As you said, is that the counting of those proper expenses in the proper period.
Right.
Yeah, we wanted those to be accounted in the proper period. So again, why the accounting is so critical, because you can see there some deductions could be shifted the following year.
Absolutely.
And then you missed that deduction.
Exactly, because you kind of shifted it to the following year, but it's not technically an expense for that following year. Actually, absolutely. Other things that they should be doing, of course, is and we kind of mentioned in general, is tracking all, keeping their records in check, any loans that they've taken throughout the year, whether to themselves or they have to pay it back, or from a bank. All the loan documents should be available, easily trackable. What else?
The other thing to take into consideration now is leases. I mean, the leases, especially with all the COVID situation, probably people had lease modifications, debt modification, and those things that you need to come with those early. You know what I mean? Don't wait. And not only of the COVID, because now we're in 2021. A lot of the lease modifications, we encountered a lot of that in 2020 when the whole thing was kind of in full force, and people were encountering challenges with their leases, and they had to go back to the bank and get modifications done, because the accounting of that. How do you account for that modification? If all of a sudden they're gonna say, "Listen, don't pay the month of July, August, September, but we're gonna back end those expenses," you know what I mean, or those leases, or those mortgage payments. How are you gonna account for that? You know what I mean? So even in 2021, there's still situations of modifications happening, because again, people are encountering, especially now, what is happening is because a lot of the government assistance is over. The PPPs are over, the EIDLs and things like that. So now you don't have that. So people are also encountering, okay, so how do I continue sustaining my business? And so people are going back to banks and to the landlord, trying to modify the agreements without breaking the agreement. So, if you're encountering that, or you encountered that situation, you need to discuss that with your respective accountants and tax advisors.
Yeah, absolutely. What else? What else do we need? Okay, of course, making sure that they also reconcile the bank and the credit cards that they may be using, any PayPal, Stripe, any kind of processing that they are using. Make sure everything is closed out. Backup data. If you need to make sure your data is backed up, just in case of loss or any kind of damage that could happen. In your building, wherever it is, you store your data. Always have a backup for it. And of course, review your financials and make sure you analyze your numbers, compared to your budget, if you have already set a budget, and see how you're performing. And of course, from there, that's where you start with the budget or the goals for the following year.
That's it. That's a very good checklist. Now, it's just to make sure that you go through it.
I'm going to put it in the chat as well.
Yeah.
Yep, I'm going to put a little list here that I put together, so that way everybody can get it.
Awesome.
Awesome. So we've already gone through our 30 minutes, and hopefully everybody enjoyed. Whoever was watching has enjoyed it. Thank you so much for joining us today for Coffee Time with Marie and Pedro. Make sure to enjoy the holiday season, and make sure you take these notes down and follow the list. And of course, I want to leave you with the idea that, you are some of the 5 people you surround yourself with. So be sure to surround yourself with
Yep.
the right people. And I hope that we are the 2 out of the 5 that you are surrounded
Exactly.
with. So
Yeah, so you only need 3 more. You already have
we need
us.
3 more.
Exactly.
Awesome. We will see you next week, Thursday, 10 a.m. Eastern time. Until then, be safe and
Yep.
healthy.
Okay, take care.